So after finishing yesterday with a pretty strong move and a bearish pattern in the market forecast, today we rolled back over to the downside, at least in the big Nasdaq names. Not so much in the Russell 2000, but especially in the Nasdaq names. So what does that tell us? Does that tell us that we have more room to the downside? Are we about to get a big move to the downside? Should we expect some volatility here? I'm going to break all that down and what kind of charts we see that we've seen in the past during a similar type of pullback that we're getting right now, as I mentioned to you last year, as well as what the pullback looked like in November 2016 as we headed into that election cycle and the kind of slow grinding move we had then, how that compares to what we have now. So I'm going to break that down. We're going to take a look at stocks that are sectors that are doing well, some sectors that didn't do so well today, and use that as an opportunity to place another hedge type trade against some of the bullish trades that we've been doing. So let's go ahead and get started. Today is Friday, October the 2nd, 2020. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. You can see how we finished the day down, and after getting a light green shading and a yellow line pattern on Thursday, starting to move back down with a red line again. Still light green shading, as you can see, the intermediate line still slow, rising at a slower pace than what it was, and your near-term line's coming back down and potentially coming back down below the midpoint. You can see after getting up above both the momentum and the near-term line here, getting above its market sentiment, both are back down below it and moving back. Now the question is, where are they going to bottom out? Again, when you're bearish, you bottom out at lower levels. Now you notice the near-term line still hasn't bottomed out at a really strong low point. You can see when you get significantly bearish, the near-term line gets down there, and we haven't seen that yet. This has been more of a grinding pullback, and again, we haven't even broken the 23% retracement level except for a couple of days here before bouncing right back up to the moving average. So, a very similar pattern on all. The Dow Jones looks very similar. The Nasdaq Composite actually got you a green line yesterday, but still light green shading. Its momentum line today did fall down into the low reversal zone. And then finally, the Russell 2000 was actually pretty bullish. It has dark green shading, so it's the first out of all the indexes that the intermediate lines crossed above 50. And its short-term sentiment, unlike the other indexes, this short-term sentiment is actually really bullish and is rising. The near-term line in the upper reversal zone. Remember, all the other ones are falling closer to the midpoint. Now, granted, it's a long lower shadow, and long lower shadows aren't as bearish when you've had a bullish move like this at resistance. They're not as bearish as long upper shadows are, but they still can be bearish. So keep that in mind. I wouldn't put a lot of stock into that bullishness. Now, if it was at the bottom of a downward move, then it'd be really bullish. But in this case where you're at resistance, you see that 78% Fibonacci retracement level of the decline that we're still, that we had broken down below here, and now we're, that's acting as a resistance level as well, as we're still in between the 23 and 0 and 23% retracements. The Nasdaq is also back up above its 23% retracement, though it's starting to come a little bit closer down to falling back down below it. So we'll kind of keep our eyes on this. The expectation is that we're more than likely going to continue to roll over heading into next week. We're not going to fall off a cliff, like we did with this COVID low point. That none of the charts are showing us that we're that bearish, but we're also not bullish, right? We're bearish enough to maintain this intermediate pullback that we're in. When you're in a bearish, even at this COVID low, we weren't dark pink shading in a red line the whole time. For a good chunk of time we were, but not for the whole time. It's not like when you're bullish where you can be dark green shading in a green line for a very long time. Not the case when you're bearish. Look at all these other intermediate pullbacks. There's lots of light pink, light green shading mixed in and yellow lines during these pullbacks, and that's kind of what we got right now. We have light green shading and a yellow line yesterday, and we're kind of mixing it in. And at some point in time, I expect that we'll go back to dark pink shading and we already are back to a red line, but back to that combination of dark pink shading and a red line again. It won't be very long. You can see they don't last very long. All these little pullbacks, they don't last very long to get these levels unless you're significantly bearish. Even over here, it didn't last very long. You had lots of dark green shading on this period of time. So that's what I expect. I expect another bout of dark pink shading again and red line coming out of this as we kind of come back down. We broke above this little line here. Now we'll probably come back down to it towards this 31.35 is the level I've been keeping my eye on this whole time as a potential support level as we head down there. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon right here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us there on YouTube. Also, while you're down there, hit that thumbs up icon. That tells me two things. Number one, that you liked our video today. And number two, you want us to do another video on Monday. If you don't like our videos, of course, you don't have to click on anything. But if you do like our videos and you want to let us know, you can do that with one click right now while you're watching. Just hit that thumbs up icon there. Also, while you're down there, comment. What did you get out of our videos today? What questions or comments do you have? Post those in the comment section below. Join our website at marketscholars.com. There's a link popping out right there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there at DavidSettle42. And join our Market Outlook Facebook group that we've created. Also, if you're watching us here on our blog, check out some of these other things on the right, including the Market Outlook live video. Every day I do the Market Outlook, I do a live video at 3:30 Eastern Time. I review all old trade ideas that we've done in these videos. I continue to manage them until we close them. And then I put on today's trade idea before the market closes. So check that out. All of our subscribers get access to that, as well as all of our trading rooms are very popular. These two in particular, the dividend and growth investing and our top-down trend trading, are two of our most popular trading rooms we have. Brandon teaches both of those. You get access to those and all of their archives. We have over 2 years worth of archives in our calendar that you have access to. Check out some of these posts too. Our premium subscribers get access. They can register for all of our trading rooms with one click with this link here. And then also our premium subscribers get access to all of our charts that we have. So you can see how to put those onto your charts with this post here. Also click on this heart. It opens up a new window. Hit that like button right there. Click on this thumbs up. Also opens up a new tab. Click on that like button right there as well. Again, the more you do that, the more likely we are to get more than 120 people that see our posts out of the over 1,000 some odd people on Facebook and that are subscribed to this page. So again, Facebook and Twitter will promote our content to all of our followers with the more engagements that it has, like likes and retweets and shares. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us here. All right, now let's take a look at the weekly chart and how things played out this week. Very small bullish candle, higher close, higher high, no lower shadow, but not the strongest bullish candle. We didn't really get a transition. In fact, you can almost call that a transition. To where you would expect more bullishness. I don't think that will happen. I think we'll kind of grind our way down some more bearish candles towards, like I said, this 78% retracement level, which you can see now that the 200 or 40 week moving average, 200 day or 40 week moving average is actually starting to creep up above that. So if we were to get down to it, kind of like this, it would be a retest of that line before we bounce back up. Very, very typical type move that you expect on a weekly chart. Let's go to the weekly market forecast chart. You notice again, like we after getting through, and there's that retest in May that I've compared this pullback to. We haven't had that retest yet. We haven't come back down. We got so far up above it. We haven't come back down to the 30-week moving average, which you can see now is above the 38% Fibonacci retracement. So that's why, there's multiple reasons why I don't think that if and when like this pullback is done, it's not going to be a deep drop. It's going to be more of just a drop down to some pretty strong support levels in this area. And then when we bounce, we'll bounce up with a really decent move. That might not happen until after the election's resolved, but at least we know that until the election's resolved, if there's a bout of volatility, it's not going to be a big deal. It's just going to be, painful. Some people that really got long in this area thinking, here we go. But it won't be that big of a deal for most, as we just kind of trade the up and down moves here over the next little bit. Let's take a look at the 3 green arrows chart, and you'll notice here that we have 2 green arrows. We never did get that third one there, and the MACD histogram is already rolling back over. In fact, if you take a look at the 2-line versions, you can see that histogram there rolling down. The stochastics, if we were to roll over, would be a phantom red arrow. So that's a red arrow. That's a rollover that you get without getting above 80. So that's bearish. That's more bearish than a regular red arrow when you cross below 80. Because at least when you're crossing below 80, you're crossing from a really good strong bullish high point. This wouldn't be a very strong bullish high point. In fact, it would be more considered a bearish high point. We did get above 60, so we're in bullish territory. But if this is about all we get, especially with momentum slowing down, and momentum slowing down without the MACD getting positive, which means the 8-day is still below the 17-day. In fact, if you see the price was below both the 8 and the 17 for a good chunk of the day. We ended up closing about right at the 17 days. So if we roll back over here, both the MACD and the stochastics would be kind of in bearish territory. Looking at some of these other oscillators, you see very similar things occurring. We didn't get above 60. We barely got above 50, roll back down. We barely got above 0. We didn't get above 100. We barely got above 0. We're rolling back over and almost back down below 0. If you look at the DMI, you can see that the negative index never did come back below 20. It bounced right back up. The positive index never got back above 25, and it's rolling back over. So all these indicators are telling us that wasn't very bullish of a bounce, and more than likely we're going to head to more bearishness here in the next week or two, depending upon how long this next bearish near-term drop lasts. Now let's take a look at the intraday chart here, and you'll notice the late little selling that we had, and a little bit of selling after the market close, of course, with the president getting taken to Walter Reed there. You can see the point of control, and you can see if we break this kind of the 331 area, which is the value area, it's last week's high point, we would end up filling in the rest of this gap, and there's just very little volume down here. So it's going to be very easy for us to get back to 325, where the 23% retracement is, and get down to 320 or below, because there's not a whole lot of support down below us and a lot of volume up above us. So a lot of headwinds to keep us from really going up in the short term. So it appears like we're hitting some resistance here. If you look at today's volume, above average, 89 million. The trading range here, and no gaps today, but right about at the average, the ATR. So you see that we're still pretty elevated, relatively high here, close to 2%. I don't think we'll go too much further up above 2%, which means we'll continue to have kind of a grinding move to the downside. Don't expect big, chunky moves. Big 3% drops up and down like this. We're not going to get this kind of pullback. It's going to be more of this. And again, I've compared to you before last May of 2019 right here, and you can see we didn't get big chunky moves during this pullback. And that's the type of pullback we're having right now, and very well will continue to be that way. You can see historical volatility remains below implied volatility. And implied volatility remains elevated. In fact, if you take a look at the VIX, you'll see that implied volatility itself on an absolute basis is elevated here, still above 25, but on a relative basis, still it's actually in a bullish. It's like the sweet spot for bullishness for stocks to go up. So it's kind of a little bit of a we still haven't really got that jump up in volatility, and I don't think we will until the very end. I've compared this before. We've talked about the last May, and there it is there, and we got a chunk. We got a big jump in volatility at the very beginning, but then it was at the end we got more of a jump in volatility there on a relative basis. But if I were to go back out further to the election of 2016, you can see here the pullback started here in October, and you notice we didn't get very high, got into the neutral zone, and then the worst of the volatility occurred right before the election, and we got up to 100%. Again, we're still about a month away, so we're about right here in the election cycle if you're comparing it directly to 2016, which means there's still some ups and downs of volatility. But again, like I've been saying, I think that the worst volatility move, which wasn't that big of a deal, but the worst move will probably occur late. We'll get up to that 100%. Then we'll know, okay, there's a good chance that we're pretty much done here. All right, so to summarize the technical outlook, we've had a nice little bounce. It culminated in a nice kind of buy or sell the rally signal. And I know I've talked about before in previous videos. In fact, I don't think it was this Wednesday's video. I think it was last Wednesday that we posted on Intermarket. And Andy Nyquist writes the headlines, and he wrote the headline for that video was "Sell any rallies that we get." And this rally that we got, it culminated in a sell the rally signal on the market forecast. And I think, the none of the indicators showed that we were that bullish at all. And we still haven't really had that surge in volatility to now culminate. If we didn't get one to start the intermediate pullback, which means now we'll probably get one to finish it. And we haven't had that yet. So, but we're not going to get big moves up or down. We are going to get moves up to the upside and to the downside, but expect it to be around average. Kind of like the moves we've been getting. Expect it to continue to be that way until we find support, until we probably get through the election cycle, and then we can shift more to the stimulus news cycle and the vaccine news cycle and other things like that that can start to, which is all for the markets have been mostly bullish. So what do you think? Do you agree with that technical outlook? Do you disagree? Comment down below, especially if you disagree. What do you, why? What are you seeing that suggests why you're either a lot more bullish than I am or you're a lot more bearish than I am? All right, now let's take a look at what's driving the price action, and let's look at how things performed here this week. Let's go down to September. Nope, not 2020. We'll go to September 21. We'll go to September the 28th here. And let's take a look at a 15-minute chart. So you can see stocks were up this week and bonds were down. Long-term bonds were down. The dollar was down. Commodities were down after starting the week relatively strong. The lagging, they ended up down. Gold was up because of the weakness in the dollar. Emerging markets did well until the end of the week. But look at small caps. Small caps really outperformed. And QQQ, which was outperforming, had a real significant down day to finish the week. So if I just look at now this week that was, again, you can see all the weakness was in these large cap tech names and a little bit of strength in small caps that held it up. So when you look at that relative strength chart that I've shown you here before, you can see we had a pretty down week here. The MACD the RSI, is still above for the ratio. It's still above 50, so we're not breaking down. And I do expect that we will have some weakness. I expect that we will have some weakness here as we head lower towards that 200-day moving average. And again, so that means the RSI, the CCI will break below 0. The RSI will break below 50. You can see the ADX. It's still the negative index is still pretty low, and I've shown you that in the past we've looked at the PPO here. Let me bring up the PPO again. Percent price oscillator 1040. There we go. So it's still negative and it's still below a falling moving average. I don't think it's done yet. I think there's going to be a time, and there's a weekly chart, so we are going to turn back up and move back. I don't think it's going to get to 0 before it moves back up first and gives us a divergent high point. But until then, during any kind of weakness we get right now, again, up to the election, potentially through the election for a little bit. Watch for this to start to underperform as we move towards 166. I mentioned before that these tech names are good hedging opportunities. That's where the hedging opportunities are occurring here. Which means, and we saw that here, today. The QQQ just really underperformed the broader market as a whole, and small caps held up. Now they'll be weak too. So if we if we do continue to roll over, don't expect that that IWM will always go up on days Qs go down. It's just that they won't go down as much. They don't have nearly as good of a margin of safety. I've shown you this chart before. The Bollinger Bands, just looking at QQQ, you can see there's a pretty decent gap in volume until you get down to really even the 50% Fibonacci retracement. There's a pretty decent node there. There's a little bit of a node right here, right above the 38%, but you can see it can really fall down to those pre-COVID high points. I remember IWM is below its pre-COVID high, and you can see it's got its margin or point of control right below us, and then here at the 62%, you've got another pretty decent volume node. So there's very strong support. That's about as much downside that there is to small caps, but QQQ has a lot more downside because it doesn't have nearly as much volume support. So that's why you'll expect that ratio to really kind of to move down towards that 200-day moving average. That doesn't mean that we're getting a new shift in leadership. It just means that that QQQ doesn't have a good margin of safety. So it's got more to lose during a pullback than some of these others do. TNX had a pretty decent end of the week, getting up into the upper quartile of the bandwidth finally. It's got a very, very low bandwidth. So, as I've shown you before, bonds are kind of poised to make a pretty significant move. It's flirting with its point of control. If it breaks down, there is like no volume until you get to the bottom of this retracement zone at the 62% retracement. So it can really fall pretty sharply. So look, that's a pretty decent move that it has coming up here. The Euro US dollar, you can see, like the broader market, has some room to come down. Again, that doesn't mean the dollar is going to start a new bullish trend. It just means, a bullish trend for the euro here, it means higher highs and higher lows. So that means there's going to be pullbacks to higher lows during this bullish run. So same thing with the dollar. On bearish trends for the dollar, the definition of a trend is lower highs or lower lows and lower highs, which means there's going to be times where the dollar rallies up to lower highs before it rolls over down to new lower lows. So when it trends, when it pulls back like this, again, it doesn't mean we're getting a new trend. It just means we're moving down to a higher low, higher than the last lows that we got. And we would expect that, and especially when you look at the market forecast on the Euro US dollar here, you can see, according to the market, intermediate line, there's our last low point. So, wherever we end up dropping to, most likely to 115.50 in this area, 38% retracement, maybe down a little bit lower to this 50. But if that's where we end up coming down to, then that will be a higher low point than the last one that we had. And we'll expect that we'll roll up off of it and move up to a higher high point and continue this bullish trend, bearish for the dollar and bullish for risk appetite as a whole. All right, now let's take a look how these sectors are performing, and we'll come to the sector comparison chart here. And again, just look at just this week that was. Remember, it was a pretty decent week for bullish for stocks here, especially small cap stocks, more so than the QQQs, which really struggled at the end of the week. Well, if we take a look at the sectors, you can see energy, of course, down. Real estate we saw had a really strong week, but look at utilities. So again, kind of a bullish week, and utilities and real estate were up. You can see financials were up too, which is not typically a great leader lately, at least, especially with the yield so low. Discretionary is up, and we know why, but look at technology and communication services, which were really strong until Friday, and then they dropped down pretty big. In fact, they ended up lagging the broader market as a whole. The only sector to the downside was the energy sector, which is such a bad sector, but it was the strong sector on Friday. So if I were to just come here to Friday, go to like a 10-minute chart here. Then you can see energy actually did well, and industrials and financials and real estate and utilities. Not your best leadership group here. So we weren't really bullish anyway, but when we're not bullish, here's your leadership group, and they struggled on Friday. So that's the weakness. There's nothing wrong with having weakness, right? That, again, the definition of trends is higher highs and higher lows. So you're going to have to produce higher lows, which means you're going to have pullbacks. And during the pullbacks, your leadership is going to lead to the downside. This is not great leadership, as bullish as they were. It's not great leadership there. So, don't think that, oh, well, now we're going to start moving into these areas. No, you're not. It's just very temporary until we get our new intermediate run starting. And you'll show some weakness. You can see there's your three major stars lately, and you've got light green shading and red lines on two of them. And discretionary has been holding up better. Look at energy there, just really getting hammered. And then there's your utilities and real estate. They're really rallying, and that's not those aren't bullish leadership sectors, right? You can see healthcare and financials. As bullish as financials was, it's still light green shading and a red line. So there's still a lot of weakness across the board. In fact, the only dark green shading and green lines are discretionary and utilities. Not the best, not the best. So we're still in kind of pullback mode. We see it reflected here. That's okay. Eventually, these three sectors here at the top, technology, discretionary, communication services, will roll back up off their support levels. They've got some room to fall because they were so bullish, but once they're done, then they'll find some good support, and they will continue. In my opinion, they'll continue to lead again to the upside, because there's still a lot of pulling forward to occur here with this work from home trade and the 5G and robotics and automations trade that we've really been accelerating here because of this COVID pandemic. All right, so that brings us to our trade idea of the day, and the stock I wanted to take a look at is actually AMD. And again, another one of these stocks that had a really good bullish pattern up to the 23% retracement, pulling back down. The MACD, the momentum really dropping down, the near-term line rolling back over. Long-term market sentiment is currently falling. The intermediate line is slowing down after a nice little rally here. You take a look at some of its oscillators, similar to the S&P 500. You can see the positive got above 25, rolling back down. The negative really dropped down below 20. So it's got a pretty decent bearish move that it can produce, especially considering, like other tech names, not a good margin of safety, right? If you were to break down into the retracement zone, which is at that 38% retracement, there's hardly any volume until you get to the 78% retracement. So it's got some potential. Again, if things turn bearish, this has a lot more room to fall than some other stocks. So, and if it keeps going up, we'll take a small loss on it. But if it keeps going down, we can make a good hedge trade here that can help offset what we might be losing in some other bullish trades on some of the other stocks that we've been doing. We've been doing a lot of bull put spreads lately. So just give us a little bit of a hedge against some of those trades that we've been looking at. You take a look at its long-term chart, the long-term crossover chart here. And you can see that, we, like the broader market, kind of got a little bit of a bullish Hakinyashi candle. But again, you can see there's an opportunity to break that 50, and there's a pretty decent gap down to the 200. And that's the gap that that we can hedge, right? If the markets do turn down and the Qs turn down more, those type of names turn down more than other stocks, then we can fill in that gap pretty easy, and we can try to profit from that. And if we bounce, we can take a couple $100 loss, and knowing that we're making a lot more money on all the other bullish trades we've been doing. So the way that we trade it, we come over here to the November expiration. We're going to sell the 65, buy the 67.5. What that does here is here, let me get rid of the other bull put spread that's about to expire in our class portfolio. If it keeps going up, then I've got a $500 loss. So it's about half a normal position size that we've been using for our class portfolio. Very easy to keep my risk to even half of that. So a couple $100. But if we do keep going down, and we goes down all the way to November expiration here, then you can see for a couple $100 of risk, am I willing to lose that to try to get a $2,000 reward if I need that hedge? And the answer to that most definitely yes. I'm more than willing to lose a couple $100, knowing that everything else I've put bull put spreads on will more than make up that loss. More than make up that loss. As we've been really focusing, not just in market outlook videos, but our class portfolio on that bull put strategy here, on the stocks that have a really good margin of safety, and using these stocks that don't have a very good margin of safety in these QQQ names for our hedge trades, and AMD being another one of those examples. Alright, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link that's popping out in the top right corner of your screen. That takes you to our Market Outlook forums. All of our subscribers, even our free subscribers, get access to that forum. Our premium subscribers get access to all of our class forums where all of our content is. But everybody gets access to the Market Outlook forum. So open up any new threads with questions or comments, reply to anybody else's thread, and let's keep this conversation going here in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon on down below as well as on Twitter and Facebook, and comment on our video. Thanks for watching. Have a great rest of your weekend, everybody, and we'll see you all next time.